Morning, Steve Reed in Chicago with the morning grain comments. Well, the markets are lower overnight. I think there continues to be concern about the economy and how fast we can come back, even if we start to slowly reopen certain things. Crude oil is lower, stocks are lower, and the grains are lower. As far as the other news, I think that we're expecting somewhere between, let's say, 50% of the U.S. Corn crop to be planted right now. This compares to maybe 29 to 30% average, and I think some farmers might even be ahead of that, with certain locations like in Illinois and Iowa saying that plantings are done. About 30% of the soybeans are planted versus 11 average, and that is also ahead of normal. We expect on May 12th USDA to come out with some carryout numbers in soybeans and wheat a little bit lower than this year. That could offer some support. The corn number, though, could be higher than this year because of the drop in demand. So far, crop conditions are favorable and also adding some pressure to the corn market. We're also concerned about U.S. export demand, especially soybeans to China, because of the increased tension between the two countries. So it'll be interesting to see if China does meet the agreement of the Phase 1 trade deal in this particular environment. Weather-wise, it's going to cool down here in the United States. Friday, we could see some temperatures below freezing in parts of the upper Midwest. We'll see if that impacts early planted corn. But don't think it's going to get far enough south to hurt the wheat crop. But it's important today to see how much of the crop is heading. As far as the another event, mid next week, it actually looks a little colder. There has been some rains in the eastern part of Europe and western Ukraine. Those rains are expected to move into southern Russia today, which offers help and relief for the crops there. So all in all, if we start trading below $5 July wheat, we could be in a 460, 490 range. Corn prices probably will continue to sink lower until we actually see demand pick up. And soybean prices at these current levels, around $8.50 or below, is overvalued if the next year's demand doesn't pick up, especially China trade. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.